Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And surely we've seen that pace of recovery coming in for the markets. From red, we moved to the green and managing to hold on to those levels. So no complaining in terms of the market today. We are holding on to 24,950 around that mark. Almost near the day's highest point is what we're seeing the Nifty is trading at right now. We also have the mid and small cap. So let's pull up the Nifty mid cap because, that was a bit of an underperformance that we saw at during the first half of the trading session. But now that also picked up pace. That's also recovered. Day's highest point for the Nifty mid cap as well. Small cap too trading with gains of almost 0.5%. Nifty Bank also managing to hold on to some bit of a green there as well. So yes, Nifty Bank is also among the gainers coming in terms of the move. IT among the top sectoral gainers at one point of time. So that's interesting to watch out for, whether there's Infosys, TCS, all these names also are buzzing away in trade. What's trading in the red today? All the sectors actually have now moved to the green. So nothing is in the red. We've seen that recovery. No complaining there. Nifty Pharma, 0.03% gain. So yes, let's watch out for there. Hoping for this to sustain in the last couple of hours of trading session as well. But yes, that's how the market setup is looking like. Not much of a Monday blue coming in here. Instead, we're seeing a good green coming in on the screen. But this is a show where we solve all your stock related queries. And to just solve that today, we have Ashish Kyal of Wave Strategy Advisors joining in with us, as well as Parthiv Shah of Tracom Stock Brokers joining in with us to just do that. Ashish as well as Parthiv, thank you so much for joining in with us on the show. Ashish, a quick check on the markets. Today, surely versus what we were expecting, given the global tensions, it's a better day than what one envisaged. What are we watching out for in terms of levels? Do you think this time, if we see the Nifty cross that 25,000, is it going to sustain? Because that's a mark I don't think we sustained, and we've sustained over a period of time right now.
Hi, Vinny. Afternoon to you and all the viewers. If you look at, like what we discussed last time, Nifty has a very important support around 24,490, 24,460 zone. It has tested that zone multiple times, including this time, and bounced back sharply on the upside from there. So despite of the event or the war, the levels are working very importantly. And on the upside, I think if it crosses 25,000 this time, it's going to sustain. It's going to head towards 25,300, 25,350 mark, because there has been multiple attempts. And despite of the crude oil price going up, despite of the volatility in the global markets, we are still sustaining about the mid Bollinger Bands on the daily time frame chart. So that's bullish for me. I think any dip from here around 24,850 will be an opportunity to buy again, keeping 24,700 as a stop loss for someone who wants to buy, aiming for 25,200, 25,300 levels on the upside.
Okay, keeping an eye out on those levels over there. Even the support, which has been very strong, is an important one to watch out for. But let's get started with the query segment now. And we have Jinsi. The first query is coming in from her, who's writing to us from New Delhi. This is an investment query. So she wants to know if it is good to invest in Cochin Shipyard as well as SBI for the next couple of years. 1 to 2 years is her time horizon. Parthiv, what's your view coming in? Cochin Shipyard, obviously we know the shipbuilders, defense side, they're doing well. But does it merit buying it at these valuations? What's your thought on that? As well as SBI.
Very good afternoon to you, Vinny, and our viewers. Firstly on Cochin Shipyard, no doubt I think the valuations are a little elevated, as you rightly pointed out, quoting at around 55 trail multiple, and on a forward basis, if you're to put a multiple, it's around at 40 times. But I think when I look at the capability of this company and the current order book, the company is sitting at an order book of around 21,500 crores. And more importantly, 78% of that order comes from the defense sector. And we are seeing a sense of urgency even from the government in terms of, trying to develop the shipbuilding industry for the country, because India has one of the highest and the longest coastal lines. And a lot of the shipping industry is now dominated by China, which is always not a good sign. And I think we have wasted a lot of forex in terms of importing a lot of ships. So that is why I think it seems like in the upcoming policy action as well, government will take a lot of steps which will benefit key players like Cochin Shipyard, who have massive capacity. And also they are expanding their facilities big time. And the total capex is being talked of somewhere around almost 2,500 crores, which is a sizable increase in their gross block. So we believe that the long-term future is intact, and the investor has a 2 to 3 year horizon. Certainly, I think Cochin Shipyard looks very interesting. Talking about SBI, I think again, the valuation wise, I think it's not looking expensive. And our sense is that the bank has turned around well, all in terms of ROEs, ROAs, the net slippage ratio. I think looking at the current book and the way now the management has guided for even growing the advances to the tune of 12 to 13% on such a huge book, I think that is very consoling. And our sense is that going ahead, SBI will play catch up in terms of its valuations vis-a-vis that of the private sector larger players. So SBI also looks good at current levels.
Okay, SBI as well as Cochin Shipyard, good one coming in on the fundamental front. On the technicals, both these, how are the charts looking like, Ashish? And is it the right time to wait for this one or buy this one? Or do you wait and actually some bit of a correction is what they could buy it at?
See, if you look at Cochin Shipyard, I think the stock went towards 2,500, corrected towards 2,060, which is the 20 DMA, and showed a bounce back from there. So I think one can enter here from a short-term perspective, aiming for around 2,600 levels on the upside. And on the downside, maintain a stop loss of around 2,065, which is an important low it created yesterday. As far as SBI is concerned, I think the stock is outperforming. We can clearly see the financial sector has been outperformance, and Bank Nifty has touched lifetime highs. SBI should do that. It's the right time to buy SBI at the current levels also. And on the downside, the support for the SBI is going to be around 760 levels. And on the upside, we can expect it to touch the previous peak high, which is 870.
Okay, keeping an eye out on these levels over there. Next query also is an investment query for today. We have Alan who is writing to us from Goa. He wants to know, and he actually wants to invest rupees 50,000 in the market. How should he start with this? Parthiv, your view coming in right now. If they're looking at stocks, 50,000 is what he wants to allocate. What should he be doing?
Obviously, we don't know what is the exact risk appetite of the investor. But my humble suggestion would be that if Alan is a first-time investor in the equity markets, bringing a sum of around 50,000, I think mutual funds would be the route because one, he gets a diversified portfolio. Two, he gets very well-managed advice via the fund manager. And more importantly, I think there is a good chance of compounding his wealth to 12 to 15% over the next 10-15 years. Anyways, if he's looking for direct stock exposure, though the amount is small, I would still recommend it to divide the amount into two parts. One, I would suggest, something like a TCS looks very good for a first-time investor because the valuations are looking more attractive. And we all know that the IT sector is going in a down cycle, but the total contract values are very strong and the execution capabilities will improve over time. And TCS has always proven its ability to re-rate once there has been a down cycle. So I think TCS one looks good. And two, I think in terms of the fertilizer industry, we're very upbeat. So we believe something like a Coromandel International is one company where over the longer horizon, the prospects look very, very good. It's a Murugappa Group company, very well managed group. The group total market cap is now almost 3 lakh crore. So such are the type of companies a first-time investor should have in their portfolio for very long horizon.
Okay, some good names coming in there for the long term is the view there. On the technicals, Ashish, what would you suggest him to look at?
There are three topics that I would recommend he can keep it in the portfolio. One is possibly Tech Mahindra. We can clearly see the stock has started outperforming after quite some time. And IT sector as a whole, I think, can start delivering now. It has been a lot of correction that we have already seen in terms of price, either or in terms of time. So Tech Mahindra is one of the picks. Bajaj Finance from the financial space, I think, can outperform from here on, so we can add on to the portfolio. And from the auto space, TVS Motors, two-wheelers, I think TVS Motors is doing exceptionally well. So these are the top three picks which he can add in the portfolio.
Okay. There are a lot of names that have gotten on the technical as well as the fundamental front. The next query for today is coming from Gautam, who's writing to us from Mumbai. 5,000 shares of Coal India. The price is 382 rupees per share. Right now, also the stock is just trading around the buy price, just making some bit of a profit here. He wants to hold it for the next 12 to 18 months as well. Should he continue to hold the stock or maybe look at something else? Parthiv, what's your view coming in? Coal India, it's obviously one of those companies which also gives dividend. So sometimes, those cash cows which are there, which manage to give you dividends. So that's also a factor that you have to play into. But does it merit holding it, or should they just book out the little bit of profit they're making and look at something else?
Surely worth holding it because I think besides a very good dividend paymaster, it is also a near monopoly. And if you read into the management commentary, they said that there is no shortage of demand. I think the demand is fantastic. It's just that in FY25, they were not able to ramp up their volumes because of a heavy monsoon. But if you look in terms of the outlook guidance that they're given for FY26 and 27, they're talking of touching almost 875 million tons of coal mining and selling in FY26 and increasing that to 900 million tons. And, over the next 5 years, it could also be upwards of 1 billion ton. That is a huge capacity in terms of, mining of coal. And Coal India has, very good quality mines. The cost of mining is really low. So it's a company which will continuously generate humongous cash flows and which will be paid out in the form of dividend because the biggest beneficiary is also the government of India. So we believe that valuations are not very expensive here, and for a 2-year horizon, Coal India looks interesting.
Okay. And Coal India on the technicals, what's the view?
The technicals, Coal India has been consolidating since March of this year. We can clearly see it has been moving in a very broad range, possibly forming a triangle pattern and then yet to give a breakout. So continue to hold on over here if you are invested. And on the downside, I would suggest that use 382 as a stop loss. And there is a possibility it can break out on the upside, followed by 407. So if 407 is taken out, we can expect 425 or higher levels. So risk reward looks good at the current levels.
Okay, let's move on to the next query for today. This is coming from Lakshmi, who's writing to us from Bangalore. She's holding 200 shares of Bandhan Bank. Price is 285 rupees per share. Wants to know the future prospects for Bandhan Bank. Bandhan Bank on the fundamentals. Is it a better play that one should watch out for, or are there other names, Parthiv?
Oh, very frankly, I believe there are other better names than Bandhan Bank. One, I think Bandhan Bank has a lot of sensitivity to the microfinance loans based on its book, and the guidelines from the regulators also change, of course, for the good of the health of the industry. Because I think last entire year we have seen how the microfinance loans have plagued a lot of these companies in terms of the stress on their book. As a result of which, I think names like Bandhan Bank also are not getting re-rated further. And I think the performance is quite okay. They've grown their names by around 11%, and the operational profit has also grown by around 11%. The stock is no doubt cheap, but we believe a name like Federal Bank looks more interesting, where I think after the change of management in terms of the top CEO, who comes from Kotak Group, I think it looks very, very interesting. They are making all the right calls to improve the retailization of this bank and also improving the balance sheet quality. We believe that Federal Bank at 1.1 times price to book multiple on an FY27 basis is very, very interesting.
Okay. And Bandhan Bank on the technicals, is it one of the good bets to hold or on the charts, or do they switch to some other bank?
See, Bandhan Bank has relatively underperformed if you look at the other banking names. But having said that, I think the stock has started showing some kind of positive price action. It has managed to bounce back from its previous pivot support of around 172. And there is a possibility we can reach towards the level of 200. So overall, over near term, Bandhan Bank looks to be okay. One can continue to hold with a stop loss of 172. And on the upside, 200 is the target.
Okay, keep an eye out on those levels over there for Bandhan Bank. On that note, actually, we're going to sip into a very short break. And as we sip into the break, unlock a new dimension of business intelligence with CNBC-TV18 Access. Our premium members only experience on CNBC-TV18.com. From market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, and high-impact learning sessions. This is a truly elevated experience with members also enjoying curated lifestyle privileges and perks. The power of insight, the privilege of access, exclusivity, experience, and influence. Yours to claim. Become a member. Log on to CNBC-TV18.com. Access plans. Welcome back to Your Stocks on CNBC TV18. We are talking about all the stock-related queries that you all have sent us, and we still have with us Ashish Kyal as well as Parthiv Shah to solve just that. Next query for today, gentlemen, we actually have is coming in from the viewer who is Padma Kumari, who's writing to us from Andhra Pradesh. She's holding 50 shares of GMR Power, I beg your pardon. This is at a price of 100 rupees per share. She wants to know if she should continue to hold this or sell at the current levels. Parthiv, your view?
We are not very upbeat on this particular company, GMR Power and Urban Infra, because I think if you look at their business mix, almost 61% of the business segment comes from the energy part. And they have two coal-based plants. One is 1650 megawatt and the other is 350 megawatt, which brings in the majority value of this particular company, which is currently quoted at market cap of around 7,800 crore. If you look into road and transportation, around 18% comes from there, and EPC is remaining 10%. I think it will require a lot of working capital for this company to ramp up its infra business, and the past track record hasn't been that great. And in the current valuation, I believe a lot of positivity is seen to be captured in. So I would avoid this counter and suggest the investor for long-term investment, you should look at players like L&T, which are sitting at a very huge order book of 5.8 lakh crores, and that is continuously going up. The guidance has been pretty good for next year, and over the next 5 years as well, we believe the type of capacities that they are building in, they'll play a major role in India's infrastructure.
Absolutely. So switch to an L&T. So get out of the stock, you're making some bit of a profit, is the view coming in on the fundamentals. On the technicals, Ashish, do you also have a similar view, or are the technical charts indicating something else?
No, I think the stock has not performed at all. Since it has been September last year, it has still dragging and not able to give any kind of a movement. And even if it goes up, it comes down very fast. So my recommendation is better to be out from here on the stock. And something like a KEC International looks much better choice than GMR Power.
Okay. So better choices coming in than GMR Power. That's the word there. Let's move on to the next query for today. This is coming in from Joseph Kurian, who's writing to us from Mumbai, holding 3,500 shares of South Indian Bank. Price is 28.3 rupees per share. Wants to know whether it makes sense holding this one or getting out of the stock. A lot of banking names have come in today. Parthiv, what's your view on South Indian Bank now?
I think it's an interesting pick because one, the valuations are extremely cheap at around 1.6 times price to book multiple. And again, here also we had seen the change of top level management, after which I think a lot of positive steps have been taken. And in the last couple of quarters, the net slippage ratio has started to come down. And I think the bank is now focusing more on the secured side of the asset on the balance sheet. And we believe that results of which will be witnessed over the next few quarters. But I think valuation wise, it's very cheap and no harm holding this bank at this juncture.
Okay. That is the view coming in there for South Indian Bank on the fundamentals. On the technicals, what's your view, Ashish?
See, on the technicals, we can clearly see the stock has shown some kind of an outperformance. It was around 23 in April and now quoting around 29 odd levels, 29.30. So the overall undertone looks to be bullish over short term, and one can continue to hold here, maintain a stop loss on the downside at 28.50, and on the upside we can expect a target of around 33 levels.
Okay. Keep an eye out over there on the levels over there for South Indian Bank. Next query for today, Alan Matthews writing to us from Kerala. 65 shares of Asian Paints, 2,900 rupees is the buy price. Long-term outlook for the stock is what he wants to know. Parthiv, obviously so much is happening around the paint space, the competition coming in as well. Your view for Asian Paints, does it merit holding it now for a long term?
I think the biggest concern here is massive competition by Grasim, by the Birla Opus brand that they've launched. And I think some channel checks also suggest that, people are experiencing that, Birla Opus is picking up in terms of the dealer distribution fraternity. And I think Asian Paints, if you see, since the last 3 years, the stock has massively derated in terms of valuation. It used to quote at around 65 trade multiple. Currently, after the devaluation, both in terms of the price correction and time correction, it is still at around 54 trade multiple. And last 3 quarters, we have been witnessing very, very tepid volume growth, because in decorative paints, I think hardly you've seen Asian Paints underperform, go below 5% in terms of volume growth. and last 3 quarters were really bad. So I think looking at that, one does fear that the competition is reaping in. We saw JSW Group also eyeing ExxonMobil assets, and this particular sector is getting very in competitive wise very intensive. So that is why we believe that one should avoid a counter like Asian Paints right now, allow a few quarters to go, and then we can take a call.
Okay, avoid right now. Maybe after a few quarters, one could take some of the call coming in on the fundamental front. Technicals, Ashish, what's your view? Because Asian Paints is not one of those performers, right? But they look at in the last 1 year, nothing exciting that's happened from there for them in terms of a stock move. So what are we watching out for on the technicals?
I agree that it has been an underperformer, but if you look at the price action, I think there is a very important support for the stock, which is around the zone of 2,150 to 2,170. It has found multiple times support over the since past 6 months in this zone and is trying to bounce back. So there is a possibility we might again reverse back from here on. And on the upside, 2,500 level is what we can aim for over near term. And on the downside, one can maintain a stop loss of around 2160 levels.
Okay. Keep an eye out on those levels over there for Asian Paints. But with that, we are absolutely out of time on this edition. So thank you so much, Parthiv, as well as Ashish, for joining in with us on the show and, as always, helping our viewers solve their stock-related queries. And viewers, thank you so much for tuning in to CNBC. But you have the last hour of trading, which is still left. And to take you through just that, we have closing bell up next, so don't go anywhere.